Good morning to everybody out there in Facebook land. Okay, it's a wonderful morning. Thank you for stopping by for this live. Listen, I really appreciate the fact that you have stopped by. If you like this, attempt to share it with your friends here on Facebook, because we're trying to become more active on Facebook, and we want to be more active on Facebook to help you guys out. This live is basically going to be about new preparers and the things that new preparers need to do, especially during this time of the season, and to some extent let you know what the things are that we're going to be doing to help you guys out in this next 30-day period. Yes, obviously we want people to reach out to us as partners, either in our mentorship program, or we also have software partners, because our deals on software, professional tax software, are just absolutely unbelievable and crazy. So we've got a lot of interest so far as that is concerned. But getting back to the kind of folks that we're really trying to help here, we're really trying to help new preparers go to the next level. Now, whether or not you consider the business that you have already, your income tax business, whether it's a side hustle or you consider it, a quote unquote real business, my advice to you is, for the side hustlers, act like this is a real, honest to God business. And the only thing that's going to happen to you as a result of that is you're going to make more money than you have imagined in such a short period of time. Different commentators talk about the fact that it might be 3 months that you're doing the tax season, or 4 months. I'm kind of closer to the 3 months because of the types of persons that we're looking to do, at least initially. Some of my brand new preparers are, talking about concerns that they have in doing business tax returns. And as their mentor, I am here to help them in terms of those business tax returns. But it's my belief, especially in the first or second year of your business, you need to establish a floor, a real base that you can depend upon to generate income. Okay? New preparers, you need to know this. Okay? This is the dirty little secret. People are not getting big refunds because they're taking extra deductions. People are getting big refunds because they qualify for tax credits. And this is the whole idea behind tax credits. A tax credit either takes away your tax obligation dollar for dollar, or, as has happened recently, a tax credit not only does that, but then returns you money even if you haven't put money into the system. For example, the earned income tax credit works this way. Also, the additional child tax credit works this way. And to some extent, the American Opportunity Tax Credit also works this way. These are the things that you absolutely, positively need to know. You need to know these things like the back of your hand. So the real fundamentals in this business, how to actually make money in this business, okay, relatively straightforward, okay. You've got to know how to input your W-2. You've got to know how to put your demographic information in. You've got to know how to verify that your taxpayer. You also have to know how to verify the taxpayer's dependents and link those dependents to where the taxpayer lives. If you do all of those things and your taxpayer doesn't have a dime in her pocket, and the reason why I'm saying her is because a lot of people that qualify for the earned income tax credit actually are women. So you want that person to still be able to do the tax return. That person, she presents to you, and maybe she just has the W-2. She doesn't have any cash. What's going on in the economy right now is going to make it really, really difficult for people to have cash in January and February especially. So you're going to solve the problem for that person. You're going to make it possible for that person to just come in with the W-2, sit down, answer your series of questions, and know that within a few weeks, depending upon, how the timing works out with the IRS, And so far as these credits are concerned, based upon last year, it's not likely that that client will receive their refund before February the 15th. That's as things are right now. But even so, if that client presents to you in the third or fourth week in January, and maybe that's even before officially the electronic system has filed, you can take their return, hold their return until the first day that you can file returns, and get all of those returns filed. Now, let's do the math on that and see just what we're talking about here. We're talking about a situation where maybe you did somewhere between 0 and 20 tax returns. Okay. And you want to go to the next level. Okay. We're going to use very, very conservative estimates in terms of what your pricing is going to be. But I want you to understand something. Your pricing is up to you. I mean, whatever the prices are that you determine. But I'll say, let's just lowball this, because I don't want to give people, pie in the sky numbers, things that are that are not realistic. I am talking about things that you can do this year. Okay. We're going to increase that 0 to 20 tax returns to 200 tax returns. 200 tax returns at a minimum of, let's say, $200. Now, many of the tax preparers will be charging higher fees than that. You may be charging a higher fee from that. Those fees might range up from $200, $300, even in some cases $400 and $500, depending upon the complexity of the return. The purpose for this example is to show you what it's going to happen if you've got 200 people, and at an average cost to you, at an average price of $200, you're talking about $40,000. $40,000 of work for maybe 3 months. Now, there's no reason that you can't do more than 200 tax returns, but I just want to give you an example of what happens when you do that much. These are real serious dollars. If you have a virtual tax preparation business, all you really need is your cell phone to be able to make that happen. That's a decent amount of money. Now, of course, the trick to all of this is that you don't become the bank. You simply utilize bank products that are already in place. And of course, that's one of the reasons why I'm here. I'm your principal partner, to allow you to have access to the bank products. And what that will do for you, it allows you to do all the things that we talked about before. And on February 15th, when the refunds start to come back in, what's going to happen is you're going to receive your refund. Your client is going to receive their refund, and everybody's a happy camper. Now, in terms of the bank product, that's the basic bank product that I use. And I use that bank product in my own business here, Mike 1040 LLC, all of the time. There are variations and other aspects to bank products. Some of them are related to loans. And there's been some talk or, controversy concerning some of these loans. I'm not necessarily talking about any additional fees for loans or advances if that loan or advance is less than $1,000. That's right. You could actually get your client an advance with no extra interest charge based upon that advance if that advance is less than $1,000. And that is really something to let people know in January and February when everybody is going to be so cash strapped. So basically, for new preparers, forget about the side hustle. This is a real business, and treat it like a real business. I was talking the other day about things that you need to actually be in business, in the income tax business. Obviously, you need a P-10. What a P-10 does is it allows you to sign the tax return and get paid for the tax return. It does not mean that you're a tax business. It means that you are an individual that's preparing taxes. In order to be a tax business, you need an EFIN. Okay, that means your electronic filing identification, and that actually identifies you with the IRS. We will help you in the process to acquire those things. As important as those things are, I was discussing on another stream with other professional tax preparers who mentioned the fact, well, those things are important, but don't forget about the E&O. E&O is errors and omission insurance that you really do need. It's an absolute must as a tax preparer. So you have to kind of take that into consideration for the things that you may have to spend some expenses on. So that's kind of a breakdown as to what our target is in terms of how we want to take you. If you're doing 0 to 20 returns, we want to take you to 200 returns and then take you somewhere beyond that. We have other partners that are already doing the 200 returns, and obviously we want to scale them up as well. That's an idea, just to give you something in terms of new preparers and people on the side hustle. Now, I wanted to include another idea, if you will, and it has to do with one of my tax customers, Desaya, actually one of my tax partners, Desaya, was asking me a question that had to do with personal finance. Remember, if you're going to be making this money, then the question is, why are you making this money? You're making this money to help your family out. One of the ways that you can help your family out is to provide a home for your family. So her question to me was, well, how do you feel about the 30-year mortgage compared to the 15-year mortgage? And I have to add this in because I got a lot of feelings about it, and I've actually been and done both places. So I want to give you some of the perspective that we have from the standpoint of history. I'm almost always going to counsel you to take the 30-year mortgage, and here's the reason why. I know this sounds boring. A 30-year mortgage is 360 payments. I got to repeat that. It's 360 payments. You got to make those payments each and every month. So knowing that different things can actually happen in life, that's the way life actually presents to us. I want that payment to be the lowest possible payment. And the 30-year mortgage really does get that job done. Now, having said that, I'm not saying that I want you to take 30 years to pay that mortgage off. In a lot of situations, okay, that mortgage could be paid off in as little as 10 years or even a little bit less than 10 years. What you're going to do is you're going to make some form of additional payment. Now, let me explain this because once again, this is it's a little bit controversial. I'm not talking about any of these plans that, say, for example, you go to the bank or the mortgage company and they say, okay, well, we can accelerate your payments by making you pay 2 payments every month rather than 1 payment every month, that sort of thing. Well, now we just went from, for crying out loud, 360 payments to 720 payments. Oh, each one of those payments you can't miss. No. That's not what I'm talking about. What I'm talking about is maintaining control. And here's where you have to kind of bear with me. Imagine, say for example, you have an existing 30-year mortgage and you want to pay that mortgage off. One of the ways that you can do that is if you have what is called a HELOC. That is basically a second mortgage, but it's a second mortgage that works similar to what a credit card would work. So let's say you had a HELOC that was for $10,000. What you could do with the HELOC is you could take $5,000 and put that against your other mortgage. And then you're in the process of paying the HELOC back. So you pay the HELOC back. You treat the HELOC just as if it was a recurring bill. And whatever it takes in order to pay the HELOC back, okay, then that's what you do. You put as much money in to the HELOC as you can. Let's say, for sake of it, an example, let's say that you're paying $400 down on the HELOC. Okay, so after a little bit more than 12 months, your HELOC is paid off. Okay. However, remember that the HELOC works the way that a credit card works. So if you pay your credit card down to zero, you can also make more purchases on that credit card, pay them down to zero, and then make more purchases on your credit card. This is what I'm saying is the secret that a lot of people are not aware of. Everything that I just told you leaves you in complete control. And that's what it's about in personal finance. It's about your complete control. What happens if for some reason you get financially strapped? Okay, the minimum payment on that HELOC is going to be very, very, very small. So you don't have to worry about situations like that. When you have changes, when you have hard times, you can either cut back to the barest minimum so far as that HELOC is concerned. And if you do that, then you're fine. You weather the storm. Now, times get better again. What do? You go right back to what you were doing before. Okay, so you pay it off. Now you're going to take another $5,000 and chunk that $5,000 once again at your other mortgage. If you do this for a consistent period of time, you're going to take plenty of years off of your mortgage. The reason being is that most of the interest on a mortgage is front end loaded. And what that means is that you're actually paying a lot more interest in the beginning of the loan. There's two components. There's going to be what your principal is and what your interest is. Okay, those are two components that are part of your mortgage. So that number, that combined number, never changes. What actually changes is that when you start with payment number 360, so you start with payment number 360, and maybe the interest on that is let's say the interest on that's $800. Okay, by the time you get to payment 359, maybe the interest is $797. By the time you get to payment 358, maybe the interest is $792. Okay, that's how it would actually work. And what happens is, as the interest goes down, the principal portion of the payment goes up. And that's how basically that's how any mortgage works, really. So what's happening is, when you're making these extra payments, you are sliding down that amortization chart. I know that's a crazy word, but I had to put it in there. The amortization chart is the chart that shows you all the 360 payments. If you follow my advice the way that I just described it to you, you'll be in a good situation about 10, maybe 11 years down the road, and surprisingly, your mortgage will be paid off. It's that simple. This plan does require a certain amount of discipline, a certain amount of real stick-to-itiveness. So if you have that discipline, then you'll be fine. One of the things that gets people into trouble so far as personal finance is that lack of discipline. So that's why I'm stressing that word. In order for you to be successful in this, you have to be disciplined, you have to stay the course, and if you do, hey, 10, 9, 8 years from now, your house is completely paid for. Are there additional details that are involved in that? Of course they are. One of the things that I do, for the people that partner with me, is to, show them different ideas, not just in terms of income tax, but also some additional ideas so far as, personal finances are concerned. So listen, getting back to the original reason that, we made this live was to talk about what our plans are in the next 30 days. Move your business from, I think I'm going to do something, okay, to actually getting it done. Okay, we're here. You can reach out to us. Use the messenger here on Facebook. You don't have to go any further than us right here on Facebook. And I'm available to answer your questions and to help you to get to that next level. If you could share this information with anybody that you come across, it would truly be much appreciated. That's all I got for you today. This is Mike Craig, okay, aka Mike 1040, here in Media, Pennsylvania, signing off. Have a great day.